Here we have a little bit of fire. Peter Schiff joins me now. You came into the floor of the New York Stock Exchange. We're looking at gold, which you love.
Yes.
Down another $14 at 11.24. What did you think of what Bill Dudley of the New York Fed said today? Well, maybe we don't have to do a September rate tightening. I'm less excited about it given the circumstances of China and everything else.
Well, remember when the year started, you had two camps: the people that thought the Fed would hike in March and those that thought they would hike in June. Right? Both camps were wrong. I was saying they weren't going to raise rates, not because they shouldn't, but because they can't, because they will prick this bubble economy that they work so hard to inflate.
What if they tighten rates, maybe not September, but possibly October, maybe December? What happens to the economy?
Look, well, the economy has never been good, right? We've really been in a recession, I think, for the entirety of the recovery. I think the policies that the Federal Reserve has used to prop up the stock market and the real estate market have hurt the real economy. That's why things are actually getting worse. But on Wall Street, yeah, things look good. But if the Fed takes away those monetary supports, we're going to be in a bear market. We're going to be in a deeper recession. We're going to resume the financial crisis that was interrupted by this monetary policy.
John Lonski is back at headquarters, and he says there's really no rush to raise rates. John, what do you think of what Peter just said?
Well, to a degree, Peter's right, because the Fed did want to inflate the economy with monetary policy. That was the underlying purpose, to try to breathe some life into what was a dying economy at that time. He's also correct to the extent that this is the worst economic recovery since the 1940s, regardless of what Fed policy did or didn't do. I think that's going to remain the case. I think we're looking at a prolonged period of subpar growth. 25 years into 2000, U.S. real GDP used to grow by about 3.25% annually on average. When I look ahead to 2025, I see growth of only 2.25%. That's because of demographic change and also because of ever-increasing competition from increasingly skilled emerging market countries.
Peter?
Well, the problem is when the Fed was breathing life or breathing air into the financial markets, it was sucking it out of the real economy. That's why we haven't had a recovery. But everybody who thinks that the Federal Reserve's policy succeeded, there's no success here. There's no success until you raise interest rates and shrink your balance sheet. And the Fed can't do that. That's why rates have been at zero for 7 years. So why didn't they raise them 2 or 3 years ago?
So when Buffett says, I think the Fed up until now has done a pretty good job and I wouldn't raise rates until sometime next year, it would be really hard, you say?
Well, they've done a horrible job. They should have raised rates a long time ago. They should raise them right now and let everything collapse. Look, we needed a deeper financial crisis in 2008. We had to clean out the bad debt. A lot of companies that should have failed were propped up. Now they're going to fail again with only bigger debts.
It's okay. Keep going.
Yeah. So the problem is we never really had a recovery because we didn't have a real recession. The Federal Reserve caused all the problems that led to the 2008 financial crisis, and now they've made them all worse. So all they can do is keep interest rates at zero. They're setting up for another round of quantitative easing. People who think the Federal Reserve is finished printing money, they're just getting started.
When you see a Dow Jones Industrials gain of 550 points, are you buying U.S. stocks or elsewhere?
Well, I'm still avoiding the U.S. stock market, even though I think the Fed will save it again. Ultimately, I think this dollar bubble is going to burst. I think the real values are offshore. Meanwhile, for the last several years, everybody who's believed the Fed's bluff that they're actually going to raise rates and shrink their balance sheet, they've all bought the dollar. That's putting pressure on commodities, downward pressure on emerging markets. But everybody is preparing for the wrong outcome because the Fed cannot raise rates without collapsing the U.S. bubble economy. So they won't. They're going to come back with more quantitative easing, just like they did QE3 when QE2 didn't work.
So you say QE4 is coming?
It's coming, and you want to get out of U.S. assets, take advantage of the fact that other people have no idea what the U.S. economy is really going to do or what the Fed's going to do, and buy foreign assets when they're on sale. You can buy foreign stocks, you can buy commodities, and yes, you can buy gold.
He's the gold bug extraordinaire, Peter Schiff. Thank you very much.